And it's time to do business once again. This time it will be 55 minutes around the world of business. Here's what we have prepared for you on this episode of the program. We'll be discussing rescuing Nigeria's telcos. We heard from an insider that that sector is in an intensive care unit. And in Kenya, in spite of the protest, there's likely to be tolling on some of the roads in that country. And the very first carbon market is now open in Egypt. Good afternoon, I'm Ini John Mekwa. Let's do business. In 55 minutes, oil prices climbed on Wednesday after an industry report showed that U.S. crude and gasoline inventories fell, and the market watched a possible widening of the Israel-Gaza war, which may impact global oil supplies. Looking at the numbers right now, it's green, 0.7%, $81.25. That's for Brent. A barrel, WTI, is also up 0.8%. At $78.94 a barrel. And of course, sentiments around that Middle Eastern producer, Iran, that they've not yet retaliated against the assassination of Hamas official, just leaves a lot of uncertainty right there. And then, of course, U.S. inflation expected later on today, just hours from now. That is also another factor that investors in that space are looking at. And still in the global space, now metals, gold prices edged lower on Wednesday as investors remained on the sidelines ahead of that U.S. inflation data, which is expected later on today and could set the tone for the Federal Reserve's September policy meeting. Take a look at the numbers right there. Spot gold is down in the red, lost 0.2%. As at the time we took this numbers, $2,460.87. U.S. gold also down. It's been 3 consecutive days of red trade for this market, and then that's 0.3% down, $2,500.30. Spot silver follows suit at 0.6%, losing from the price, $27.68. Platinum also down 0.5%. It was lost $931.73. While palladium has recovered compared to what we had this time yesterday. It's 0.1% up at $939.25 per ounce. And so we see, of course, after those numbers that we're expecting from the United States, we'll see which way this color will come on the screen after that. Now we come back to Nigeria. Nigeria's foreign exchange reserve dropped by 0.68% to $36.62 billion. That's as at August 12, and that's down from $36.87 billion recorded in August, as at August 7th. And that's according to the latest data from the Central Bank of Nigeria. The decline in the external buffer comes as the country's currency, of course, the Naira, recorded its very first decline at the foreign exchange market after 4 consecutive trading days of gains. In the week, the CBN began its retail dollar sales to banks. Data from FMDQ Exchange shows that the local currency unit fell by 0.7% to 1,582 Naira 9 kobo against the dollar. That's on NAFEM at the close of trade on Tuesday against 1,570 Naira 99 kobo that it closed with. However, at the parallel market, it was a flip. Local currency appreciated by 2 Naira against the dollar to close at 1,598 Naira for a unit of the exchange, of foreign exchange. And then we come to the telecom sector in Nigeria now. Well, they say that that sector in Nigeria is gasping for breath and is an intensive care unit. That was a thrust at a hybrid telecom investment forum organized by the Financial Derivatives Company in Lagos, Nigeria. The chief executive of Financial Derivatives Company, Mr. Bismarck Korani, says that there's an urgent need to rescue the sector from collapse. The future of Nigeria's telecom industry is the concern of Financial Derivatives Company as they sit for Telecoms Industry 2.0 conference to discuss the next investment frontier in Nigeria.
What do we see as Telecoms 2.0 in Nigeria? What do we want to achieve from that? Because the next 25 years will be very different from the last 25 years. But what happens in the next 25 years is a function of what we do, the choices we make, the decisions that we make, and the enabling environment that we create to attract not only domestic capital, but also foreign capital flows into the sector.
Delving into the issues is a panel conversation, and they are discussing the challenge of insufficient infrastructure, which is a major one, as well as policies hampering investment in the space.
Charges, levies, taxes that, again, as an industry, we have to deal with. We want to invest in infrastructure. It takes how many months to actually build the tower, and you have to negotiate, ROW right of way. So it becomes quite taxing. But fortunately for us, I think speaking for Airtel in particular, we have a future-looking approach to Nigeria. As said by my very good friend Bolaji a while back, it is a market that you need to be in if you want to be in the industry. But I think the question is, because if you don't invest in capacity in this particular industry, growth, not only of yourself and not only of the industry, but more importantly, the country is going to be impacted in the very near future.
However, this optimism is not shared by some other participants. One of them, the Chief Executive Officer of MTN Nigeria, Mr. Carl Toriola, who joined the meeting virtually. According to Mr. Toriola, there's an urgent need to rescue the sector from collapse as it is in an intensive care unit. He also notes that a fundamental challenge is that the financial returns expected from the industry are now so low that they threaten its very survival. For others on the panel, charting ways forward is priority, and it will include looking inwards.
Being able to source capital locally or align your investment strategy to the realities of local capital and foreign exchange, the skill sets that are available, affordability in the market, and who's going to be able to pay for the services, and the reality that in technology, a lot of the inputs are foreign.
If you look at mangoes or you look at pineapples supplied to Europe, those goods don't get picked from the farms until the plane is actually on the ground at the location. And that's only possible because of the kind of telecommunications and technology that is required. So technology and telecoms plays a key role in aviation, and aviation plays a key role in how markets function.
Sharing ideas and implementing strategies for the telcos was the motivation for the organizer, Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani. He believes there's a need.
What came out clearly is that the sector is actually bleeding. And you can see from $8 billion of revenues in 2020, it has dropped to about $3 billion now. So the revenues of this industry is a third of what it used to be, while their costs have increased. Like it was clearly put, this industry is in ICU, intensive care unit. Something needs to be done. What needs to be done? New investment. New investment will not come except the pricing formula is changed. That is what has happened. But it's quite clear that in the environment in which we are, that it's going to be very difficult. But like they said, it is during war that generals are made.
Developing the outcome from meetings such as this to meet up with challenges in the telecoms industry is another foundation to hit the $1 trillion economy, which President Bola Tinubu hopes to achieve by 2030. And that, they say, is another reason for this. Yeah, well, telcos are bleeding. Let's find out from an individual who was also at that event yesterday. Engineer Gbenga Adebayo is the chairman, Association of Licensed Telecoms Operators of Nigeria. That's Alton. He joins us virtually now. Thank you so much for joining us, Engineer Adebayo. Good afternoon.
Good afternoon, and thank you for having me.
Yeah. So both the managing director of MTN Nigeria and the CEO of Financial Derivatives Company, the organizer of that event, they painted like pictures that are not so pleasant when it comes to the telcos. Tell us as an insider, what's the reality now?
Absolutely not. The situation is very bad. We are not in a good position as an industry considering the economic headwinds. The fact remains that we operate in the same socio-economic environment as other sectors. But unfortunately, the dynamics of our industry as it is, the cost of providing services today is not reflective in the end user charges. And therefore, it's very difficult for people to have guarantee or assurance on the return on their investment. And so the needed investment to drive the sector is not coming, particularly what is required to drive the base infrastructure, which is mostly the infrastructure of the infracos and that of the network, mobile network operators. And we're saying that something has to be done both in terms of policy and in terms of enabling environment in order to remove the bottleneck that we currently have so we can have a healthy industry. Even what we are facing today, it's very, very difficult for providers to continue to provide services without hindrance.
So I do know that the telcos, they proposed to increase tariff at some point in the midst of all the macroeconomic headwinds. I think that was not approved. Is that what might be, even if it's a short-term solution?
It's one of them. It's one of the elements, because other than that, the cost of providing services today is high. Input is very high. Energy is very high. Logistics cost is high. And a number of other elements that the industry is dealing with. Also, we also have the cost of governance, cost of compliance with government directives and regulation. We have issue of multiple taxation and regulation. In response to that, you have behavior of public actors going to seal up Telecoms site until the premium is paid. You have revenue collection agencies going to close offices and arrest staff until the premium is paid. All of this create very hostile operating environment. And you know today the cost of energy, particularly the cost of diesel, which is faced mostly by our infrastructure providers, what diesel costs today and the kind of theft we are seeing on different locations is quite concerning. So first you have the high cost of logistics or delivering diesel to site. Then you have the high rate of vandalization and stealing of diesel from the site. And quite a number of these factors that we face today, which has made the cost of providing services extremely expensive. And therefore, tariff is one, but the other elements that makes up for good operating environment are the variables that need to be considered. And that's why we're saying that stakeholders have to do something now. With all the problems in hand and what we are seeing, it will not attract the needed investments in the sector. That's why we're crying that more or less getting into a critical unit where now, if something is not done, the timing again may not be right. Yeah.
So just before we get to what you think should be done, you did mention multiple taxation. Could you give us an example? Do you have the number of taxes, and perhaps agencies that are after these taxes?
Today, we face about 54 different taxes and levies across the country, 54. And this goes across federal government agencies, state agencies, local government agencies, and other groups of people that consider themselves into revenue enforcement agents that with a view to raising IGR. Unfortunately, while the federal government talks about providing an enabling environment, it's not the same as the subnationals. Also, the behavior of some of the agencies, even at the federal level, is also at variance with what the government is saying. And so, unless these issues are addressed holistically, government must pay specific attention to our sector. 54 taxes and levies is too much for one sector. Enforcement of collection is a problem. You wake up in the morning, some guys have gone to seal up site in the name of IGR. By evening, a number of staff are arrested and their tools are seized because an IGR is expected from the company and all that. And this just makes very hostile operating environment and no one is paying attention. Just last week, we had a meeting with a group of people calling themselves now the Association of Telecom Landlord Owners. These are people that group now who come together in a group to say they form an association as landlords of telecom infrastructure. And they try to also set some rates and band within which operators have to either lease a site, rent a site, or pay a premium for the annual renewal of site that they lease. And so that's just an example of some of the things we face. In a few states, you have charges like affluent discharge, environmental levy, community development levy, education levy, capital investment levy that are charged by different state governments as an example of part of the things that we are facing. And so with this multiplicity of taxes, collection and compliance and fulfillment of those obligations on the part of the operators is extremely difficult and just makes very hostile operating environment. So the issue of tariff is one. But the operating environment is another thing that government must address. And we think that for us to have investment, significant investment required to run and drive the sector and keep it sustainable, government needs to do a lot in terms of policy issues, regulatory issues, safety and protection of our infrastructure and people who do work for us, and as well as the right tariff.
Yeah, so I do know that the Taiwo Idele committee, they have some proposed reforms, which is supposed to streamline, the number of taxes especially. But you do have a regulator too that's supposed to be looking after your affairs. Do you have conversations in these areas with your regulator?
We do, and our regulator is quite aware about the challenges that we face. But they regulate telecoms. They don't regulate revenue collection agents. So those who are in charge of managing the revenue agencies are those who should address this matter. Again, we're aware about the Presidential Committee on Tax Reform, but the fact remains that we've heard more of this on radio and on television than in real life. So we haven't seen the outcome of the work of that committee, and I think the time is now. If there has been some relief for the industry, the time is now, and we must begin to see those reliefs in place.
What relief do you think would be very essential and effective at this time?
Say again, please.
What kind of relief do you think would be very essential and effective at this time?
First is the elimination of barriers to the right operating environment, protection of our infrastructure as critical national infrastructure, repairing our tariff as it stands today is not sustainable, and providing a general enabling environment for the sector to work and to thrive. Otherwise, we risk a situation where services become impacted. Providers may not be able to provide service at all times and in all places where the challenges become extremely high.
Yeah, and I believe you also have the issue of non-state actors also in this chain of challenges that you face.
Well, we also have the issue of the USSD debt, which is what we've been talking about. The debt is growing, stands today at over 200 billion naira. We're concerned that also remains a sour point for us as an industry. If you have that injection to the sector today, it will do something in the scheme of things. So these are many more issues that are at hand, and they need to be addressed. Yesterday, the stakeholders have spoken. They've spoken very clearly. Our regulators are aware about these issues. They are doing all that they can within means, but I think they also need to be assisted. Government need to have clear understanding about the problems that we face as a sector and address them one by one. There is no industry that is immune against failure. There is no industry that is so successful. If the policies are not right, it's only a matter of time before something will happen. So we think as stakeholders that the industry is in a very critical situation, and the time is now that government has to do something. Our government has to own this problem along with us and has to do something to address the issues faced by the sector. We are too critical to the survival of the economy that we can't allow things to go in the downward spiral. It would be too dangerous for us as an economy. Yep.
Yeah, obviously. I mean, communication, telecommunication, is an important. But just before we let you go, Engineer Adebayo, the issue of network. The quality of network these days has been a worry. I know then in the midst of the protests, there were allegations or suspicions that, perhaps it was because of the protest. But I mean, the quality of service hasn't been the same since then till now. I wonder what's happening.
It's one and the same. We're talking about the same thing. You can't have good quality of services if you don't have the right investment in the sector. Systems are becoming of age. Number of equipment are going out of service because of the nearing end of life. And so availability is becoming a challenge. And again, it speaks to what we're talking about. So I think the concern from here is it can be the beginning of a longer problem, a bigger problem, if the issues are not addressed. You don't want to come to a point where you start having ration service available. You start having services at a place in the morning, not available in the afternoon in the same place and all that. So we need to address these issues. Quality of service, as we are seeing, I think is we're beginning to see the problems of a bigger issue in the industry, which has to be addressed. So I can't say to you that it will go away because if people are not investing, systems are not being fine-tuned, systems are not being upgraded, operators can't pay the obligations as due. It will be very difficult to provide good quality service. It is not a reason, but it's a cause actually.
Well, sadly so, Engineer Gbenga Adebayo. But we do hope that, as you said, And since your regulator is aware that at least they can represent the welfare of the sector and speak on it. The Chairman, Association of Licensed Telecoms Operators of Nigeria, Alton, thank you so much, Engineer Gbenga Adebayo.
Thank you. Thank you for having me.
Oh, not very good ones, not very good story right there from the telecoms, because everybody needs it. We need to communicate. We want to do business, in every way. Let's hope something is done about that before it gets out of hand. Let's take a break now. When we come back, we'll head to the market with Aniti Edit. Stay with us. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now with Aniti Edet. Aniti, good afternoon.
Yes, good afternoon, Amy, and happy midweek. Let's talk about that. So,
Yeah.
what you can see, yesterday, you were on the market and you talked about the market being in the red a second day. No thanks to profit taking by investors, of course. They have to
Yeah,
take
Boa
profit.
Cement seems to be getting a lot of profit taking on it these days since last week.
Exactly, and that also
maybe there's news in the horizon, you know, that investors are privileged to get, and that's why we see that.
But let's just hope that that news is not a negative news, because sometimes it could be a dumping of the shares. On the one side, there's profit taking, and then, of course, there's also that caution that something could be going on, because if you take a look at their financial performance, it wasn't something too gladdening to talk about.
Yeah.
But let's talk about the intraday numbers, which is sort of a gladdening for some of the investors. At intraday, you see the market at a tad 0.06% intraday movement. But the bad news is that the market, it's official now, it has fallen to about a one-year low, 97,444.99. That's the magic number at intraday, although that number was about an hour ago. So, but intraday, the market is still oscillating, fluctuating in between greens and the reds, in between this number, higher and lower. For the JSE, well, before we talk about all the other markets, most of the African markets were in the green except for just one, but we'll be looking at that. JSE, it has gotten back to the 81,000 level, 81,662.88 at intraday 0.87%. That's not doing pretty bad there. Let's move on to the other side of the other markets there. Egyptian Stock Exchange, the EGX 30, 0.80% at intraday, 29,000, just gradually climbing back to the 30,000 level, which you can see at intraday, while Kenya Stock Exchange for Tuesday's trading session, it closed at 0.30%. That's for the Kenya All-Share Index, what you call the NSE All-Share Index for the Nairobi Stock Exchange. And now from the equities market, let's talk a bit about the fixed income market. Well, we see first the impact of the Naira's decline, as well as the Forex market, the Forex reserves also being in the decline, and some other factors within the fixed income market. Now, to give us more perspective about this, let's bring in our analyst for today, Senator Audu, a Forex and fixed income dealer with Access Bank. Now, thank you for joining us, Senator.
Thanks for having me, Aniti.
Okay, now, let me ask a question. Is there a renewed pressure on Nigeria's Forex market? Because just last week, where the central bank resumed after 10 years the retail Dutch auction, which was expected to spur the Naira as well as drive liquidity in the market. Now, tell us what is happening to the FX market. What's going on there?
Yes, so as Riley said, the CBN came in last week to conduct the retail Dutch auction. At that auction, over $800 million was sold, about $815 million to various people and entities who had requested to be presented at the auction by banks. So prior to that auction and its announcement, we had seen the Naira trade at 1,600 levels, but immediately following the announcement and the conduction of that auction, we did see an appreciation in the NFX and the NFM rates to below 1.6 levels. Although we saw a depreciation in the NFM rate, which is the rate that tracks the Nigerian Autonomous Foreign Exchange Market, we did see a minimal depreciation there of about 11 Naira. We saw a corresponding appreciation in the NFX rate, which is the fixing rate that tracks that market. We saw an appreciation of about 4 Naira in that market. So although we've seen rates moderate at about 1,577 Naira per dollar, this is still below the 1,600 levels that we had seen before the auction. Speaking to the reserves, we did see a marginal decline. Yesterday, we saw the figure print at 36.62 billion, but this is still a robust reserve position compared to where we are coming from, which was just under 37 billion.
Okay, so now, so from the FX reserve, let's talk about the fixed income market now. Yes, yesterday we saw a bullish sentiment across the treasury bills as well as the bonds market. Now, 24 hours from now, we will be seeing a new inflation data, which at some point, some are saying 34.26, while some are saying is expected to reduce due to number of factors. And how is this going to play into the fixed income market as far as yields are concerned?
Okay, so over the past two inflation figures that we have received for the past 2 months, we've seen only a marginal increase. We don't expect that the trend will be significantly different this time. So market participants have largely priced that in. With regards to how the market is trading more in line with liquidity. We did see liquidity figures decline following the FX auction conducted last week, about 509 billion in the red yesterday, but opening today, we've seen a significant improvement to about 7 billion in the green. What we've seen market players do is largely be bullish. So as you rightly explained, we've seen a bit of a bullish sentiment across the bills. We've seen the May bills trade at about 24% levels, while we've seen the February bills trade at about 23% levels. These are bills that had been trading at 24 to 25% levels prior. On the bond side, the reason for the bullish auction is a little bit different. We're meant to have the bond auction on Monday this week for it to settle today, but the DMO postponed that auction by a week until next week. Speculations is largely along the side that there was the FX auction being conducted last week, and the DMO did not want to crowd that space. So we did see that auction postponed to next week. But we also saw an amendment in the calendar. So previously, the 3 bonds on offer had 100 billion each allotted to each of them to be offered 300 billion. But we did see the DMO reduce the size on offer across all 3 bonds by a cumulative 110 billion. So on the 2029s, we have 70 billion offered. The 31s we offered, and we have another 70 billion, while the 33s we have 50 billion offered, for a total amount of 190 billion offered across all 3 bonds. So considering that reduction in the size on offer, we did see market participants start to cover their short positions on some of these bonds. So the 23s, for example, the 33s rather, for example, had been trading at about 22.2%, but immediately following that announcement today, we've seen those bonds trade at about 21.65%.
Senator, quite a lot of activity at the fixed income market as well as the forex market, but I think we'll leave it there and look out for other numbers coming for the close of midweek trading session, and look ahead for the July inflation report, just like every other country around the world. Thank you so much for your analysis. So that was Senator Audu, forex and fixed income dealer, with the fixed income numbers for intraday. And now from Africa, as usual, we make our next stop to the Middle East, where we see mostly positive sentiment there. We see bargain hunting driving a kind of a recovery from what the market had been recording in the last 2 trading sessions there, starting first in United Arab Emirates. The 2 indexes there, the Abu Dhabi and the Dubai, both in the green territory, 0.15% and more than 0.5% for the Dubai FM. On the other sides of the market, we see Saudi Arabia 0.59% and the Qatari Stock Exchange 0.45%, both at intraday. And of course, we see how that number will turn out for the close of our midweek trading session. And from the Middle East, we cross over to the United States, where we see the stocks futures a little bit mixed. Unchanged, but then in the green, 0.01% green for the Dow Jones Industrial Average, the S&P 500 0.05%, and the Nasdaq index 0.04%. First of all, the markets are awaiting. Previously, they were awaiting the July producer price index, which came in slightly below economists' expectation. It came in at about 0.1%. But now the markets are awaiting the very, very important consumer price index, which is supposed to gauge the next move of the U.S. Federal Reserve's at next month's meeting. So now that number, which is expected to be released anytime from now, is expected to show a rise of 0.2% month over month, in contrast to what it had in the month of June. So, but that's it for the market. But overnight, the markets, Wall Street, it rallied and moved closer to last month's record levels after data show that the number what we just mentioned, the producer price index rose less than expected for the month of July. But to give us more details about that, here is our Washington correspondent, Maria Bird.
The U.S. stock market had a sea of green on Tuesday as the Dow Jones was up at 1%, the S&P 500 up at 1.7%, and the heavy tech Nasdaq up at 2.4%. Many investors were glad to see the sea of green, as is much anticipated that there would see some cooling down of the U.S. inflation rate. This cooling down effect has caused investors to have hope for the U.S. stock market over the next days and weeks ahead. It is also clear that U.S. investors are waiting to see what will happen from the CPI records that are due to be released on Wednesday morning. This release of the CPI could lead to the fact that U.S. stock market could see continued major gains over the next days and weeks ahead.
Our Washington correspondent, Maria Bird, with the markets numbers on Wall Street for Tuesday. And then a final stop, we move over to the Asia markets, where we see kind of a mixed bag there. 0.58% for the Nikkei. Talking about the Nikkei, that's Japan's index of the top 225 listed companies there. We see that the country, most of the investors are cheering the announcement that the country's Prime Minister Fumio Kishida announced that he will be stepping down next month. Of course, and at the same time, we see that the market is already cheering that news in positive territory. At the same time, the Nikkei 225 has managed to make some gains, 36,442.43 points for that market. Then in South Korea, the Kospi index 0.88%, and this is coming as the country's seasonally adjusted unemployment rate fell to about 2.5%. All the way from 2.8% in July, and that's hitting its lowest point in October 2023. For the Hang Seng Index, we see a little bit of a pullback for the close of midweek trading session, 0.35%. The index level at 17,113.36. And for the other sides of the market, we see Shanghai, that's for China, we see a 0.6% decline. The market number just dropped all the way from the 3,000 level, which it was, to about 2,850.65. And finally, for the Australian Stock Exchange Index, we see a green there, 0.31%. And this is coming amidst the reports that the Australia's Securities and Investment Commission, the ASIC or ASIC, has sued the country's largest market operator for allegedly making some misleading statements about how its blockchain project to replace its aged clearinghouse electronic sub-register system, CHESS, which was it was progressing before revealing that it has cancelled that project. But that didn't have any effect on the exchange's performance, 0.31% for the close of Wednesday's trading session. So, that's it for the numbers of all the markets that we track at intraday and for the close of midweek trading session.
Yeah, I guess will keep our eyes really close to the United States in a couple of minutes, I guess, or less than an hour. We should have the inflation number. Thank you so much, Anita.
Pleasure.
All right, now let's head to the UK. Talking about inflation, the inflation came out hotter than expected, a bit above the target, the 2% target, but we have Juliana now to fill us in. Hi, Juliana, good afternoon.
Good afternoon, Innie. Yeah, that's absolutely right. There's been mixed reactions to the data released this morning by the Office for National Statistics, looking at the Consumer Price Index for July, which has gone up, as you quite rightly said. It shot up to 2.2% from 2% where it stayed for the past couple of months. In fact, 2% is the actual Bank of England's benchmark rate, which is why we saw interest rates being shifted down to 5% at their last Monetary Policy Committee meeting. Now, of course, CPI is registered on an annual basis here in the UK. And if you look back to this time last year, the big talking point of the time was energy prices. Britain, which was then run by Prime Minister Rishi Sunak, was really trying to make the country energy secure. So although we didn't have some of the measures that were put in place to bring down energy prices in 2022, we still had a buffer, which is why they were brought down or wiped off by about £1,000. We haven't seen that as much this year, which is why we've got that 0.2% uptick. In fact, I think Citi analysts were pretty surprised it wasn't as high as they had anticipated at 2.3%. And I do believe during some of his minutes after the MPC meeting last month, Andrew Bailey, the Bank of England governor, did actually forecast that inflation could go up by 2.4%. So I think some analysts are pretty surprised and actually quite happy that it hasn't gone much higher than it had been anticipated. Now, of course, as you were quite rightly discussing with Aniette, everybody is waiting to see what CPI data is going to be looking like across the pond in the US. I think that figure is definitely out now. And then it's all of this that is going to determine whether or not in the September MPC meeting we will receive a further rate cut, which I think analysts are suggesting, because we got data yesterday, which we discussed on your show, Inni, looking at wage growth, which has finally stabilized. Obviously not great for people who want a pay rise, but certainly a good indicator for the Bank of England as to whether or not interest rates can be cut again. And that's what the markets are pricing in for next month.
Yeah, Juliana, that's right. I want to get that number out maybe before the show comes to an end. But let's look at the markets now. What are investors doing amidst this?
Markets are in tip-top shape at intraday. Like I said, I think economists had priced in a much higher inflation rate, and the fact that it's lower than anticipated, particularly services. So services sector, as we know, contributes 80% to the British GDP. So a really important measure for growth. And that has actually dropped to its lowest in 2 years. So service CPI dropped to 5.2%, and I think that's cheered investors at intraday. The all share is up 0.48%. The FTSE 100, the UK blue chip index, that's up by 0.48% too. And the FTSE 250, the domestic market, that's up by 0.60%. In the currencies market, the British pound is currently trading down against the US dollar by 0.18%, down 2 against the euro by 0.40%, and down against the Japanese yen by 0.15%. I think it was that inflation figure that pushed down the pound today, Inni.
Well, expectedly, Juliana. Thank you so much for that.
Yeah, thank you.
Well, let's head to EU now, Germany to be precise, where, well, it's summer break, I think everywhere around the world, and 4 million around the world. That means school is over, children are at home, and after a well-deserved vacation, you start a new part of life, an apprenticeship leading to a job. However, in Germany, more than a third of apprenticeships went unfilled last year, and that's according to latest government numbers. Lars Holter has the details, the background story, and all. Lars, what can you tell us about this?
Thanks for having me, Ini. Indeed, these are some shocking numbers. 35% of apprenticeships went unfilled. That means companies were not able to fill 1 out of 3 positions they were offering to young people entering the labor market. For some perspective, back in 2010, only 15% of apprenticeships went unfilled. That was seen as something business could deal with. Now they are starting to see major problems. Looking into some details here, the numbers are a bit lower in the former West and a bit higher in the former East. Large companies managed to find more apprentices, and smaller companies seem to be having a much harder time. And some business sectors are hit especially hard. For example, the heating and plumbing sector. And it's because that sector has an unreasonably bad name. Young people think of clogged toilets and a dirty job. What they don't see is that they're also installing heating systems. They deal with renewable energy, control high-tech appliances, and even more important, they do a job that is absolutely guaranteed to be in demand forever, basically offering a lifetime of job security.
So are there ways this can be reversed?
Well, there's a few ideas out there. First of all, it seems schools need to do a better job to get students into internships and training programs with local businesses while they're young enough, that is to say, before they're making a final decision on what they want to do after school. And to be fair, companies have to do better too. Some have been trying to more aggressively approach young people using social media to recruit. And some are even offering extra cash, a signing bonus, for example, or extra money for holidays and Christmas. But more than anything, they will just have to do a better job explaining that they offer the most interesting perspective for young people, job security, and a great potential for growth. There's so many companies out there that have full order books and not enough people to keep up with the work. They're saying they can do much better as a business and obviously offer young people great opportunities in the long run.
All right, Lars, let's look at the investors' sentiment this afternoon.
Yeah, there's quite a lot of numbers expected today. There's quarterly reports coming out by Germany's largest energy providers, and there's an update on GDP growth in the Eurozone for the second quarter. And talking about the Euro and Brussels in general, there is a bit of trouble brewing again between the EU and Elon Musk after the world's richest man interviewed Donald Trump on his social media service X, formerly Twitter. The EU has asked Musk to make sure he follows the rules the bloc stipulates in its Digital Services Act. And that, of course, includes censoring fake news and political lies, of which there were many in that interview. Musk answered with an expletive, and the EU has to figure out how to proceed. Worst case, it could ban Twitter or X within the bloc, or it could fine the company up to 6% of its annual revenue. We'll see what's happening. I'm getting the popcorn out.
I'll join you, Lars. I'll join you. Thank you so much. Yeah. Yes, well, you know, that interview between Elon Musk and Donald Trump yesterday was a video to watch. Oh, well, I saw the audio. I didn't see the video. But it was something to listen to. I mean, these are two very interesting individuals, you know, filling the space right there. But we are happy to tell you, at least for the United States, that the CPI edged lower, just came out. The target has been 3%, but it went lower to 2.9%. So does that mean that the September cut is coming to be real? We'll talk about that in the coming days. But the US CPI, Consumer Price Index, is down lower compared to June. It's down to 2.9%. That's the story just coming in. And then we head to Africa now, beginning with Kenya, where the Kenya National Highway Authority is proposing the road tolling policy that will help the country repay loans used to fund major road projects and fund new ones. The authority, in a statement, said if the policy passes, it will allocate the revenue generated from such road tolls to maintain the same roads. The authority has, however, assured thorough and extensive public participation in the proposed road tolling policy in efforts to ensure all voices are heard. The authority said it is in talks to introduce the tolls on several highways, and once it is finalized, it will guide which roads will be towed. And in Egypt, the push for delayed payment terms backfired in its bid to secure huge wheat supplies at favorable prices, resulting in the purchase far smaller and more costly than anticipated. The General Authority for Supply Commodities, that's the GASC in Egypt, which is the Egypt state-owned grain buyer, sought to lock in nearly 4-year low wheat prices by issuing its largest ever single tender, aiming to purchase 3.8 million metric tons for future delivery. However, they only got about 7% of that, unfortunately. We're still staying in Egypt now, but now it's the carbon markets. That country has a voluntary carbon market. They witnessed a launch of it on Tuesday. It was announced by the market regulator chief, and that's Mohammed Farid, is the chairman of the Financial Regulatory Authority, and he said the contract is intended to finance projects that generate carbon credits. Farid also mentioned that the next phase will involve incorporating certificates for new and renewable energy projects, allowing these initiatives to benefit from this new market. Additionally, he said that the successful completion of the first issuance, registration, and trading process through the Egyptian exchange. Well, carbon markets are effective tools that incentivize companies to reduce harmful emissions by providing carbon credits, which can be traded and sold to investors and companies struggling to curb their emissions. And then we go to South Africa, where the Chief Executive Office of the Development Bank of Southern Africa, DBSA, has emphasized the importance of the bank's strength for the region's development. He said, making these remarks at the bank's 2023-2024 integrated annual results presentation in Johannesburg, South Africa, where the bank announced a net profit of $404 million and provided a total of $3.8 billion for infrastructure support.
DBSA says Africa's need for infrastructure development and economic development in Africa is not only crucial but also a pressing necessity. The bank has delivered a net profit of $404 million. The bank CEO, Boidumelo Mosako, emphasized the bank's mandate to promote economic growth, human capacity building, and sustainable development across the continent.
We are here to promote economic development, growth, human and institutional capacity building, sustainable development projects and programs in the African continent. Now, when we started off, it was not like that. The DBSA was initially only in South Africa, grew to Southern Africa, and in the last 13 years, our mandate was extended to sub-Saharan Africa.
South Africa's Deputy Finance Minister David Masondo praised the lender for making an impact in the region and promised to create a conducive environment for entities like DBSA.
So one of the things we do is to make sure that we've got the right people in right positions for some of this. So is DBSA, that's why they are performing well. And broadly as government, what we're doing in growing the economy, it's a lot.
The bank CEO, Boidumelo Mosako, says the strength of the bank is important for the region.
The strength of the DBSA is important because that is the foundation of DBSA to execute on its mandate and execute on its strategy in accelerating infrastructure development.
With challenging economic climate across the continent, are there any challenges that can stand on the way? Mosako explains.
You know, challenges are there. There's economic challenges, the levels of unemployment, the levels of inequality. But therein the challenges lies the opportunity.
The National Treasury says it is optimistic about the continuation of the DBSA's good performance. Meanwhile, Deputy Finance Minister David Masondo emphasized the need to address the challenges faced by struggling municipalities. From Johannesburg, South Africa, Innocent Simosa, Channels Television News.
Thank you, Innocent. Now, we head straight to the crypto space, and it seems that the market has heard about the CPI from the United States being at 2.9%, lower than the target of 3%. Perhaps that is why we see that we've seen Bitcoin that is higher, more than 60%, which is obviously much better than what we had at this time yesterday. Let's speak to Gilbert Jopata now to tell us his feel and what he thinks. Hi, Gilbert. Good afternoon.
Yeah, good afternoon, Mrs. Simi.
Yeah,
great
great
to be here.
Good to have you. So is it the US CPI that's brought this green to the market?
You know, all eyes was on this CPI data, especially after the job number that was released 2 weeks ago was regarded as a macroeconomic warning shot. So we really looked forward to we're looking forward to today's CPI numbers for clues of what the economy is about right now, and also the potential size of the rate cut, which we are expecting by September. So yes, the data we are looking out for was that any number below 3% is bullish for Bitcoin and the crypto market, you know, in general. And then anything above 3% is meant to be bearish. So the numbers just came out, you know, in real time. So I think it came out at 2.9. So this is a positive news for the cryptocurrency market. And that's how you could see how the market is responding positively with more amplified greens at the moment.
So it looks like we're getting closer to a rate cut. Yes, no?
Oh, yes, the market has already priced in over a 74% rate cut by September. And why today's numbers was very, very important is because there were fears that the Fed has sent the economy into an uncontrolled decline by leaving rates high for so long. So both retail investors were concerned, institutional investors as well. And the Fed, on the other hand, also knew that, look, a lot of persons have expectations right now on us. So I also think even the Fed also expected positive news from the CPI numbers. It wasn't just investors. I think everybody on the board needed this kind of numbers because 74% is already priced in that we'll have a rate cut by September. So we rather needed clues of what the rate cut is going to be. So that is important today's numbers was.
Yeah, very important, Gilbert. Tomorrow's inflation number for Nigeria is also important. Well, thank you so much. All right, just before we go, yes, we have the headlines, expectation from the U.S. inflation, and we've seen it. We just talked about it. There's also something coming from Lagos. Lagos is planning to tokenize real estate to boost revenue. Very interesting, right? We'll settle on that in a couple of days. Just stay with us. Spots Ethereum record 24 million in net inflows. So seems some good things happening right there after that US inflation number. But that's it on the program today. My colleagues behind are like, it's time to go. So we have to go. But we have another round tomorrow, 10 a.m. We'll be back here to give you a shorter one and then a longer one at 1 p.m. I'm Ini John Mekwado. Enjoy the rest of your day. Bye-bye.